Welcome to this week's Market Minute. I'm Cody Moore with Wealth E&P. Today we're going to talk about the biggest news and headlines from this past weekend, the bombings in Iran and potential war breaking out over in the Middle East. So we'll take a look at how that impacted the stock market today, and we'll look at similar scenarios throughout history and what we think that will do to the stock market in the near future. So taking a look at what happened in the stock market today, as most folks would probably guess after this news broke, the stock market did open in negative territory today, so opened down to start off the day. But typically what we see with news-based headlines like this that as unfortunate and as tragic as they might be, don't necessarily have a direct impact to corporate earnings and the ability for large companies in the US to continue to be able to grow and be profitable, are quick reactions. So sometimes it's 1, 2, 3 days and then back to where the market was before. In this case, at least for what we saw today, it was about 3 hours. The stock market started off down to start the day. And then by about noon, the three major stock indices, the S&P Dow and the NASDAQ, were all in positive to about flat territory, which is about where they finished, with the NASDAQ leading the way up about 1/3% on the day today. Now, it's not to say there might not be some volatility in the market tomorrow or throughout the rest of this week as markets kind of digest what's going on. But that does follow a similar trend to what we typically see when we look back at similar instances throughout history. So here are different wars and attacks. There's the Boston Marathon bombing is in here. Similar events throughout history, looking back over the last about 80 years. And what we typically see is there is a quick reaction. The most recent two, Israel, Hamas, and Russia and Ukraine, actually had no initial dip from the news reports of what happened there. If we look back throughout history at all these different events, what you can see here is the 1-year return afterwards seems to be unfazed by the breakouts of these different wars. Not to say that necessarily the stock market performed well because the war was going on, but was just unfazed, and the stock market continued on the trajectory it was on, regardless of that news coming out. And you can see here it does cause some initial volatility upon the news breaking, but more often than not, when you look a year out from that date, stock market continued on its trajectory so long as corporate earnings and corporate America were continuing to grow and build their companies, increase profitability, and so on. So at least from the news that we have so far, do expect there to still be some volatility this week as things start to shake out, and maybe different levels of involvement come to fruition, just depending on what will happen there. But so far, at least from what we're seeing, we expect the stock market to have a quicker reaction to the news, and it being more news-based than being any fundamental economic issues with the U.S. economy. So if you got any specific questions on that, how it might impact your specific portfolio, please feel free to reach out to us at our website, wealthep.com. Thanks. We'll talk to you next week.